we are seeing quite a mixed picture even in the Asian markets.
The second quarter GDP number is a blistering 7.6%.
I think on the Nifty, a decisive break is, of course, the all-time high, which is 20,222. Above that, the medium-term target is about 20,700.
It's great to see sort of broadening of the market.
Ultratech has announced the acquisition of the cement assets of Kesoram Industries.
You have it. That's the first stake on the index, 20,200.
Clearly, the GDP number, the exit polls, and the participation of investors, both domestic and global, put all these things together, market has reached where they are today.
We think that going forward, certainly, the industry can count on something like 8 to 9% growth.
Coming to the first question, unsecured need to further dissect.
Fresh all-time highs on the Nifty, and we're pretty much holding above those levels. The retail shareholder will actually not be able to hold more than 58 shares.
The ruling MNF may not actually cross the halfway mark.
For the markets, it's clearly been a very solid session.
Well, that is the day so far. You're with us here in the last hour today, last hour for the week in terms of trade. Markets doing absolutely fine, cruising along above the previous all-time highs. So we're coming to you from the CNBC-TV18 News studios. I'm Prashant, with me, my colleagues Reema and Suri. Kaisa aapno?
Aye, strong day to wrap out a strong week and a strong month.
Yeah, I mean, there's a lot of adrenaline, a lot of momentum in the market. I mean, usually we end up complaining about at least one index, either the Nifty or the Bank Nifty or Midcaps, but everything's firing up today.
There's nothing to complain, right?
Actually.
There's nothing to complain for you especially. We'll leave it there.
That is true. I'm looking forward to a break, a little bit of a holiday, let's say.
All right, well, we will come back to that topic in a bit, but the market is doing just fine. As we said, we are above 20,222, which is the last high. And provided that we get a decisive close above the previous high, I mean, the medium-term next targets are at about 20,700. So that's a goodish, 500 points away from where we are right now, less than 500 points now. Nifty Bank is strong. I mean, that is above the 61.8% retracement. Yesterday, for example, it broke it and then ended under it. But today, with a 1% gain, near 1% gain, we are comfortably above that level. Mid-caps and small caps just in cruise control mode. Mid-cap index is up over 1. The small cap index is up a little less, but it's like, alternating. One day the mid-caps are rallying away, the other day. But it's not that as if one underperforms sharply. It's just that, both take leads alternatingly. And of course, exit poll results on Sunday. I think the only thing now to wait and watch is if the results deviate from the actual results, that is, deviate from the exit polls in any significant way. Because whatever the exit polls have showed us, which is that, the Congress is it's not a conclusive thing, but ahead in 2 and BJP is ahead in 2. If that is the case, and the market already knows this, but any big significant deviation is if at all, is what markets will react to on Monday. Looking at the way markets are, if you believe markets are sort of, the collective wisdom of what perhaps is going to happen, market's pretty confident that we will not get any upsets relative to, of course, what the exit polls are showing us. A little bit of tapering off in the last 5-7 minutes of trade, but still 0.6% gains on the Nifty. Reema.
New peaks all over. The Nifty is up 130 points. For the week, it's seen a rally of 2.5% this month. The Nifty, the benchmark indices have gained 6.5%. And look at the mid-cap index and the kind of rally we've clocked in. 3.5% for the week and a near 12% rally for the month so far. This week belongs to Axis Bank. It was a fresh high on the stock, and that's the top Nifty gainer this week with a rally of 8.5%. NTPC, Hero MotoCorp, Britannia. As you can see, it's been a broad-based up move across various sectors. A quick word on the IPOs of the week. There is a cool-off in Tata Technology and Gandhar Oil after yesterday's big move, but Flair Writing continues to remain strong, 50% up on that.
Oh, what a move it has really been. This has been a week of dream listings as well, almost all of them. Tata Technologies, Gandhar, Flair, and not too long ago we had IREDA. That stock's also had a very, very good start to its public listing life. Beyond that, midcaps are actually doing, they're playing the usual jig, and there are lots of names that are standing out. I just want to call out a couple of them. If you look at price and volume put together, and once again, PSUs are having a fantastic Friday. Look at PFC, look at REC. These are up between 6, 7, 8%. Those are the kind of gains that we're talking about. NFPC, MMTC is back, doing that little bit of an up move as we speak. Ircon, PNB, GAIL. It's just a long list of stocks. And of course, the banks like BOB long list of PSUs which are having a really, really good afternoon. So not much to complain about. Now, the question is, what do we do from here? What could the trades be for the last hour of the day and the week? As usual, we have Mitesh joining in for some help with this. Mitesh, good afternoon to you. Solid day, and the bulls are in complete control. What would be your last hour trades?
Good afternoon, Sulmi. I think very good day. And, the good thing was that getting past the earlier highs, it happened with a gap, and then we've not seen any kind of profit booking or supply emerging at higher levels or at fresh highs. So I think that suggests that this momentum is likely to sustain. Now, I've been maintaining that, with this gap up, the stop loss should now be trailed over 170, 150 zone. As long as we don't break below that, I think good chance that we are looking at 2,500, 550 levels to begin with, and then maybe even higher levels. So stay on the positive side. And on the stock side, I have a buy on Shree Cement that's breaking out of a good consolidation. So buy here with a stop at 26,500. Look for targets of 28,000. And the other one is Siemens, which I recommend buying with a stop placed at about levels of 37.29 and a target of 38.30 on the upside.
Okay. Thank you for those calls. Let's talk about PFC and REC. These stocks are surging in trade. Vivek is here with details on what could possibly be aiding the up move that we're seeing. Vivek?
Well, absolutely right. So both REC, PFC, and also IREDA, all three stocks, that are power financiers are actually seeing quite a bit of a strong up move, especially the stellar bumper listing of IREDA. We spoke to a couple of analysts, to exactly understand what's happening, especially as far as REC is concerned. Remember, today REC also gave an update to the exchanges where they've crossed the 1 lakh disbursement mark as far as, FY24 is concerned. This is compared to just around 46,000 crore in the same period last year. So significant uptick as far as business momentum is concerned. The other key triggers has been the fact that, T&D losses across the power sector has been, coming down quite significantly. That has led to improved, state distribution company financials. And this has led to improved collections, thereby taking, the balance sheets of REC and PFC much stronger. Apart from that, power capacity growth will lead to business momentum. Loan book growth is expected as India, aims for 80 gigawatts of additional thermal capacity. The other thing, number one is the valuation fact. So far, these companies were trading much below the book value, but now Street is willing to ascribe a much higher valuation as the operational metrics also, improve quite dramatically. Remember, this particular year, both REC as well as PFC were included into the MSCI standard indices, thereby, increasing the kind of institutional participation the stock itself has seen. And lastly, IREDA listing and the run-up thereafter has actually given quite a bit of a legroom even for these stocks to rally as the valuation catch-up does play too. A couple of important points to know, not exact comparables REC and PFC when you're taking into account against IREDA, given the fact that IREDA mainly does green financing and that too for private parties. And the other interesting point, especially for PFC, is the fact that PFC holds over 52% stake in REC. So, there could be an additional upside that a couple of analysts have pointed out today, especially when it comes to PFC's stake in REC.
Vivek, do we know, so what is where do they trade at in terms of multiples?
So right now, IREDA is closer to 2 times book is what I understand. Looking at the note today, and 1.1 time is where PFC is, and REC is closer to 1.6 times price to book. This is FY23, so historical price to book. A couple of analysts just gave this to me, so I'll probably have a look at some of the other data as well to see exactly forward earnings, what exactly are analysts looking at.
So it's like what's happened with KPIT and the others, right?
Yeah.
The new guy comes in and makes the existing ones look good. IRDA, I think IREDA is 2 times, as Vivek said, and the others are still cheaper. PFC, of course, a little over 1 time, but we'll get exact fix on those numbers now after the big rallies that we've seen in a bit from now. Prakash Diwan is with us to run us through what he's making of the market. Prakash, good afternoon. Good to have you here. Any thoughts? Let's just start here with PFC and REC. And, of course, now IREDA.
Good afternoon, Prashant. So I think, IREDA is the new kid on the block. There's a huge FOMO that came along with it. Though the company was available at or offered at 8,400 crore market cap, we saw what the market decided to reward it with. And that seems to be a little bit over the top. So you will see a bit of price equilibrium getting derived there. But what's interesting about REC and PFC is that the kind of change in their efficiencies in terms of the losses getting minimized, and if they were to be still available at just about 1.2, 1.4 book, you have a very clear compounding on both thermal and renewable energy funding. So that's something which is a huge market. They can pick and choose the kind of projects they want to lend to. The NPA accretion is not going to be so messy as they've seen in the last leg of growth. So you are actually seeing them being available at a phase where the growth is going to be cleaner and neater and much more finite, right? So much more definitive in that sense. As far as IREDA is concerned, I think once it kind of starts getting into a bit of a softer valuation, the stretch goes out, you'll probably start seeing that also getting lapped up by long-term investor. But typically that happens between the listing and the anchor book lock-in periods getting over. So you'll probably have to give it that time. But I think PFC, REC definitely, even at these valuations, could give you some sort of this thing. But of course, don't expect the same returns that you've seen over the last 12 months. Given the fact that the initial delta creation is already out, you'll probably see them compounding at about 20-22% for the next 3 years in terms of price appreciation as well.
Prakash, we've chatted on Ultratech Cement and Kesoram, but Kesoram is still at 146. I think the offer price when you do the share swap turns out to be 173. Do you see Kesoram Industries headed to that level? Is there still a play on the stock?
Good afternoon, Rima. So, while it's interesting, there seems to be an arbitrage still available. Remember one thing that Kesoram comes with, it's more of a bailout, it's more of a respite trade for Kesoram, right? I mean, they have a lot of liabilities which will probably get glossed over given the fact that Ultratech is a much stronger, much bigger balance sheet to absorb that. So I would believe it could go closer to that 165, 170 mark, which gives you another 10%, 12% kind of an upside. But end of the day, it's the Ultratech portfolio that's going to get very different and very positively different from here on. Remember, Kesoram comes with a lot of, potential to fill up a lot of gaps that Ultratech has in terms of its backward integration. So all of that, which Kesoram has not been able to utilize in terms of, the availability of raw material, is going to be absolutely positive for Ultratech. So I don't know where Ultratech ends up landing after this acquisition gets digested, but give it 6 months and probably you'll see, a very clear 5-digit number on the stock from here on as well. So if I were to play, and again, that's a little bit of a longer term, more definitive bet than the punt you take on Kesoram, which is just a correction of the arbitrage. So I would definitely look at, if I make money on Kesoram in the short term, put that money to work in Ultratech for the long term. That's the way it would work.
Okay, the short-term trade versus a longer-term investment. Got that. Prakash, stay on now. We'll have some more questions for you. Let's look at JSW Energy. Now, that stock's up about 3.5% today. There's a management change. The company has announced Sharad Mahindra as its new joint MD and CEO. Vivek is here with the details. Vivek, so Mr. Sharad replaces Prashant Jain, right, at the company?
Absolutely. No, so, this is actually good news because there was a bit of a leadership void ever since, the sudden resignation of Prashant Jain. The company announced that there was a bit of a worry as to, who exactly would come in. So the company today has put to rest all of the speculation, and Mr. Sharad Mahindra has been appointed as the joint MD and CEO, and this will be in effect from 1st February 2024. He is a JSW Group employee for the last 15 years, and prior to the JSW Energy appointment, he was the CEO of another group company subsidiary, JSW Steel subsidiary. So he was the CEO of a company called JSW Steel Coated Products Limited, and during his tenure there, there were a couple of interesting acquisitions made by that company too. So now when you're talking about Mr. Mahindra himself, he's also worked at JSW Energy in the past prior to joining JSW Steel. So he was the Chief Operating Officer of JSW Energy from 2017 to 2020. So, there will be a certain comfort factor given the fact that he's already been the CEO of JSW Energy. However, when you're talking about Mr. Prashant Jain, there are quite a few significant initiatives that he had taken, and, there had been a roadmap that had set by JSW Energy as far as targets till 2030 were concerned. So, number one, key to watch out for would be the kind of unlocking that the company is able to achieve as far as its renewable energy arm is concerned, that is JSW Neo. So every time Prashant Jain's come on the channel, we've always filled him up about this, and that'll be something that we would need to watch out for even from the incoming CEO as well. Number two, there have been some aggressive acquisitions made in terms of Mitra as well as in Bharat. So, ramp up over there would be important to watch. And number three, there have been 2030 targets that the company has given in terms of generation capacity, in terms of renewable targets, in terms of green hydrogen. So all of this, it'll be interesting to ask him, what exactly are his plans once he takes over.
Okay, all right, got that. Vivek, thank you very much for the details on the management change at JSW Energy. Prakash, what do you think? Have you looked at this company of late? What thoughts? Anyway, the sector is doing very well. It's extremely hot, right? Power, capex, capital goods, etc. But what about this one specifically?
So, of course, we've looked at this company and with a lot of admiration, given the way it's kind of returned in the last 18, 24 months. But, this is exactly where you play the entire growth in this renewables focus by either going into a PFC, REC or an IREDA, because at the end of the day, these companies perform or operate in a very competitive environment where the margin expansion is kind of getting peaked out. I mean, all this good news of getting into a 65% allocation from renewables in the portfolio, the kind of capacity enhancement, ventures into green hydrogen, all of this, remember, is going to be very capital intensive. So you will see first, the front-ended nature of this activity is going to be a very limited improvement in the ROCE and the ROE. So till that gets kind of, completely deployed, you probably don't see anything very major to deserve a re-rating. So the stock's already pricing in a lot of the good news. The change in management gives you more confidence that it will sustain this move and build from here on. But I would still play it with a clear growth potential of the financials of maybe some of the other players in the renewable sector which are yet to be discovered or fully discovered. So this is a mature business. It's very similar to Tata Power, which is also defining itself into this thing. So I think I would give it a little bit of a weight of sorts from here on. But yeah, I mean, it has all the potential to do well. But as I said, the pace of growth for the business and hence the stock would probably be a bit moderate as compared to what we've seen in the last 12 months.
Dixon, Prakash, do you have any thoughts? We have a soundbite of the management. We'll play that out in a bit from now. But I believe there is some capital expenditure plans being put out by Dixon. And it's sharply higher, 8%. Thoughts here?
So I think, Prashant, it's a stock that needed something like this, to give it a fillip in terms of moving to the next level. So remember, the activity that Dixon does is something where the entry barrier or the moat, if you will, is precisely because of scale. And this capital expenditure, the nature and allocation and quantum is very clearly going to give them that. The more they kind of move into a position of strength in terms of getting yielding, bargaining power with the OEMs, that's where they'll be able to capture all of that into operating leverage. Remember, they've spent a lot of focus, energies on scaling up in the last 3 years. They're way ahead of the market in the sense the rest of the players within the market. The difference between their operations and, let's say, an Amber or something will probably become much more wider, and that is what will probably justify inching back to premium valuations, which at one time in fact, they're lower than the historic valuations that they used to trade at. But this is something which will justify continuing with that premiumization of sorts. So it's a titan of this outsourcing business, So you will always want to kind of acquire some sort of a premium, and these are things that probably help justify that or kind of validate that. So I believe it's a good move. It probably come back into the reckoning as this expansion unfolds. But whether you make money from here on at this point, again, I'm a value investor. I don't like momentum as much, but there is momentum in this name for sure.
Okay, got that. Prakash, before we let you go, it's the first auto sales time. I just want to, get your final thoughts on this because stocks have done so well, right? Forget the year, this month of November as well. Bajaj is up. I think Hero is up some 12-13%. Most stocks have, even Eicher has kind of tried to recover from the lows. Looking at the sales numbers that have come in now and the commentary, any new auto purchase that you would recommend despite the run-up?
Okay, so I think what the stocks have done, the auto stocks have done, is play catch up because after the semiconductor shortage was obviated and kind of overcome, there was not much of translation into volumes. But this festive season has been really festive for most of the players. So if you look at, and of course, we are comparing it with some of the estimates from the likes of Nomura and all, but on an absolute basis, and if you don't compare it with estimates, a 1.64 lakh units of a Maruti, and that too more on the SUV and premium side, is a very significant change, right? So what these numbers tell you, or whether it's Mahindra and Mahindra, or whether it's, to some extent some of the two-wheelers, what it's telling us is that most of these companies are ending up doing what they have promised to do, or they have kind of anticipated to do. And that is something which will continue. December usually is tepid, given the fact that people want a change of the year of manufacture for while buying. So you'll probably see a little bit of a softness. But if Jan, Feb, March continue with this trend, you will see a re-rating of stock. And Maruti particularly, to answer your question, what out of the auto pack seems so promising? I think the recent act of the parent buying the company selling the new unit to Maruti Suzuki with getting shares in exchange rather than cash is a very positive affirmation of the confidence they have on the stock, right? So otherwise they wouldn't have settled for it. They had the choice. But that's where a company is available for something which is reasonably valued for a longer term basis. I think it's one of the lowest cost of any large car manufacturer with a dominant play. So I think that re-rating will continue, but it'll be slow and gradual. There's no tectonic shift that's happening in its business. But somehow I feel that there is a very clear 20-25% upside in calendar 24 that you'll see on at least Maruti.
Okay, Maruti, yes, they've been selling more of those compact SUVs, and Tata Motors has been selling less and less of them. So there's a bit of a shift that seems to be going on. All right, Prakash, great having you on as usual. Have a fantastic weekend, and we look forward to the chat next week. Have a good one. Okay, we do have to take a break, but as we do that, since we were discussing all the hot stocks of the day, Dixon is definitely one of them, and Prakash was also talking about it. Let's leave you with the commentary that our colleague Ashmit picked up. The company has inaugurated its 4th smartphone manufacturing facility in Noida. Ashmit caught up with Sunil Vachani, the chairman of Dixon, and got a sense on the business prospects ahead.
We are hugely excited about the Honourable Minister's visit to our plant today to inaugurate the plant. And as I said, I think after his visit, we are even more committed to the vision of Make in India and making India the next hub for manufacturing electronic products for the world. The plant that we just inaugurated today is the 4th plant for manufacturing mobile phones for Dixon. And this plant will have a capacity of producing 25 million mobile phones per annum. As you mentioned, that the investment that has gone into is almost about 260 crores. This is the largest plant for mobile phone for Dixon. And the total area of the plant, the covered area, is almost 300,000 square feet. As you mentioned, that Dixon is also looking at setting up a new plant in Noida, for which construction has already started. And this plant, once it's ready, will have a covered area of almost 1 million square feet at one location. So we are hugely excited about this. We feel that India is set to emerge as the next hub for manufacturing for the world. And as I mentioned, that now the focus of the company and all of us in the industry is to make sure that we deepen the value addition and also look at the movement of design in India besides Make in India.
Which in fact was my very next question. Design, there's a lot of design related inputs. The ecosystem for components is moving here. This journey as far as domestic value addition is concerned, how far do you see it progressing from where it stands right now?
So I think, there has been talk about the low value addition in the industry. So I would like to clarify that if you look at across the industry spectrum and the products that we cover basically under the category of ICTE, which is Information and Communication Technology and Electronics, which covers all, electronics and home appliances and mobile phones. The value addition is as high as 75% in some product categories. So give you an example, the new plant that is coming up for Dixon for refrigerator, the value addition will be as high as, above 75%. If you look at products like LED lighting, the value addition is 60% and up. The typical product like mobile phone The problem there is, or the issue there is, that it has a very high percentage of the semiconductor. So what we are committing that the non-semiconductor bill of material, other than the semiconductor, we will localize almost 65% in times to come.
My one final question that you had recently announced a partnership with Xiaomi. Xiaomi was also here to welcome you, inaugurate this new facility. Just some guidance on the way forward. Are you looking at more such partnerships? Can you give some color on that?
No, I think it's a great opportunity, and I think this facility, once it's fully operational, as I mentioned, will have a large capacity. And the whole idea is that, as companies and Indian companies, we need to look at life beyond PLI. And really what will matter then is the kind of scale that one generates. And as I mentioned today in my talk today, that now Dixon has a capacity to produce almost 70 million mobile phones per annum out of a total demand in the country of about, let's say, 200 million phones. So I think that's a big scale that we've created, and we hope and we feel that this will help Dixon to be globally competitive in times to come.
Welcome back. Holding steady for the markets, 20,260. It's been quite unwavering at these levels above 20,250. Fresh lifetime highs on the market as the markets get a leg up post the strong quarterly numbers. A little bit of a cool-off from the top of the trading session, but again, not much. Just a couple of points. Amit Gupta, Senior Vice President, Fund Manager at ICICI Securities PMS, is with us on the show. Amit, afternoon. What from here on? Do you think the markets have sussed out all the good news? Can there be possibility of any surprise next week post the exit poll verdict? How would you read the markets at these levels?
So as you know, the market, when the market is spending more time, if you see the earnings, they are also growing in double digits, which is coming to the benefit of the markets whenever we are seeing any intermediate decline. So if you see recently when the market declined, right, from 20,000, we are back to 20,000, I understand. But when we declined, we were very close to 5-year average price to earning, which was around 19,000. And the 10-year average was close to 18,000. So whenever the market has declined within this 18,000, 19,000, I think it is getting more and more attractive as the market is spending time. So when crude oil goes higher around 90 plus, then we see the earnings are growing by 12-13%. But again, you have seen that despite couple of wars, the crude oil is still around $80 per barrel. And this is where the earnings now are growing by 16-17%. And this is where I think Indian markets are in a very sweet spot. And we have seen that the bond yields also, Indian bond yields have always remained subdued vis-a-vis the US bond yields. You had seen that the US bond yields moved from 3.3% to 5%, but our bond yields remain actually below 7.6, which was the high made in 2022. And afterwards, now we are hearing that from June next year, the JP Morgan bond index will start including the Indian government bonds. So $23 billion is expected from there. And that is not the only ETF which will have it actually. Then you have Bloomberg, you have Russell, which may also follow this inclusion of government bonds. And this is where I think there are segments which are not performing right now. For example, PSU banks, they can also come up because they have a larger chunk of government bonds with them. And if the bond prices remain relatively better, I think they are one of the better beneficiary, at least in the treasury profits. And going ahead, when the corporate lending book will grow, as it is growing 6.5%, not the same average credit growth what is projected by the banks in the unsecured lending, etc. So when the corporate book will start growing, then you will see these players will have a much better move. So there are segments which are performing, but there are segments which are sleeping. And I think this consolidation will lead to the move in those segments also.
Okay. So that's the overall view on the market. By the way, a couple of consumer stocks are making a bit of a move now. Consumer stocks haven't done too much in the last several weeks. Britannia, however, 2.5% up. ITC has seen a bit of a spurt in the last 20-25 odd minutes or so. Let's get the intradays if we can on these. ITC, Britannia, Nestle is looking better now. There you go, Britannia pretty much at the high point of the day. There's Asian Paints, which is finding some traction as well at this moment. That's a big move on Nestle. That's just come through. Amit, hi, good afternoon. I mean, how are you placed on FMCG/consumption? We know that volume growth has been, anemic, low single digits. If you're really lucky with a company, then mid-single digits. But, where should these companies be in the portfolio, if at all? What's your prognosis?
So, yes, definitely this sector has been, impacted from the lower income, lower growth from the lower income brackets and also from the rural areas, which is not coming up actually. But if you see now, because elections are coming up, state elections, you may see some money going towards lower the pyramid. I think it is possible some of these players can start coming up. And you need to see something very particular. For example, we have Colgate in our portfolio. So this stock, which had 60% market share few years before, and it declined to 50% because of the impact of, Ayurvedic toothpaste and all, so Dant Kanti, etc. So we saw that the market share declined initially in this stock to 50%, and then it stopped falling. And I think this is something we really like. That if you have some deterioration in market share, but you are still holding a major chunk of market share in that particular segment, so still 50% is a good market share. And now the crude oil prices are down, so they are not supposed to pass on the cost. And I think this is where even at this volume growth, because it's a staple, so basic volume growth will continue. And I think this is where the profitability can come up. Premiumization, they are always looking at. And I think this is where actually we started buying the stock in our portfolios. And you are seeing that despite market is in favor of more industrials, etc. But in the FMCG space, staples, this stock actually has run up from 1900 to now 2200 plus. So I think, yes, money flow is moving, as I said, into those areas also, which have been underperforming. And I think this is where the beauty of the market there right now, as we are moving towards elections.
I mean, everything is moving, isn't it? I mean, I was talking to a friend yesterday. He said that he bought Hero MotoCorp 10 years back at around 3,000 rupee levels. He continued to hold it, and they did nothing for 10 years. And now, of course, it's seen a bit of a move. And he was wondering what to do, and whether this is just a move which will extend, which will make up for the underperformance, or one should take profit. So there are those kind of questions as well. Let me actually pose that to you, so I can pass on that advice. I mean, Hero MotoCorp and Bajaj, etc. What's the sense? We had the Bajaj management, by the way, with us in the morning. Domestic sales are doing well. Is that a sign that the rural side of things is starting to pick up? Spending is starting to pick up. The growth, by the way, is in the 125cc plus segment. Growth there is almost 2 or 3 times that of the sub 100cc segment. Your thoughts?
Yeah, you are right. So we can look at vice versa also, because generally we say when the rural growth is not coming, which is the segment which is going to be impacted worse, and it is the two-wheeler segment. And it was not performing, right? So still we have not got the numbers from the rural segment yet. But you can say as we are moving towards, state elections, these areas, it is possible that there may be some jump in the consumption spending of the rural area also. And clearly you are seeing the two-wheeler sales are coming up. They have definitely there, the numbers are robust. It was not performing at all. And I think, so this is a tactical bet, I would say, because the sustainability of the rural area we have to see. But what really is coming up, I think, is in the auto ancillary space. If you see, for example, Apollo Tyres. So Apollo Tyre has been there in our portfolio now for quite some time, in our ACE equity portfolio. And we bought the stock because we like the medium and heavy commercial vehicle, because it is directly linked with the government emphasis on infrastructure, right? And it has 33% market share in the medium and commercial vehicle space. And when the crude prices are down, I think this is something goes positive for the tires. The rubber prices are cheap, and you perform better from the earnings perspective. And I have seen 3 to 4 years of earning cycle in the tire space. The first year is already there now. So you can expect another 2 to 3 years good actually for the tire companies going forward. This is what our thinking is. And I think these companies like Apollo Tyres, which were the underperformers of the last decade, they are coming up now. And they are really doing good on the European market also, where they have increased their market share. Even at the time of, immediately post-pandemic. So I think such companies are coming up. Valuations are still much better in comparison to peers. And we can look at these companies now going forward.
By the way, it's right. Hero MotoCorp has done absolutely nothing in November. Sorry.
You think my friend was lying?
No, I was just checking the rates. November of 2014, which is more than 9 years back, the stock was at 3,028, which is the same as the level that it was in September of 2023. So 9 years and 2 months, the stock is at the same level. It's only in the last 2 months, thanks to the overall rally, we've seen the stock price move up close to about 20%.
So there are always 2 theories to it. One is the time in the market. You just sit on it long enough. If it's a good, clean company, eventually it'll move up. The second theory is, you've wasted 10 years. There could be money made elsewhere. So why debate? I'm not taking any sides on this one.
Absolutely. I just want to Amit, you mentioned Apollo Tyres. Have you looked at a stock called Nosil? Again, it's ancillary. I mean, chemicals, etc., which go into tires, etc. Any thoughts on Nosil? If you've looked at it.
Yeah, so we have not taken in the portfolio yet. But yes, you are right. When the tire, segment is likely to do better, there are other segments also. So one is Nosil, the chemical providers. The another one is the, carbon black. So that segment also performs better. So Philips Carbon, you have seen from the RPG group, that has also performed better recently. And I think going forward, the numbers also are likely to be better. We have heard the companies like Balkrishna Industries, they are also moving into these kind of segments. So you can understand that the companies are moving into some ancillary part of the tire segment. So yes, you are right that when this segment looks better, the promoters actually are expanding more into the other ancillary parts related to it.
No, got it. I mentioned point taken. I mean, PCBL, right? Philips Carbon is what you were talking about. And NOSL, I mentioned because that is another one of those names which has not done anything for the last 6 years or so. I mean, it's done 5% this year. It's very hard to find these kind of names, but NOSL is one, sort of ancillary to what a theme which Amit was highlighting earlier. Amit, we'll leave it there. Thank you very much for your time. Great speaking with you. Appreciate you sort of joining us here on Closing Bell. We'll take a quick commercial break here. As always, we'll come back. We'll get talking about what's happening in dealing rooms. Nimesh will join in on D Street Chatter. And we'll have our short-term sort of trading ideas coming through with our technical experts in just a bit. Okay, welcome back. You got the market, which is up 130 points. I just want to make a quick mention of Raymond as well. Raymond is seeing a 4% pop. Actually, it is the first daily uptick, since, I think, the 12th of September is when the decline started. The high was made that day at 1922 or so. And it's been a one-way decline for many, many, many days. Today it's seeing a bit of uptick, which is coming through. So 1570 or so is where Raymond is at. But it's time for D Street Chatter. Nimesh has been working the phones and he's got all the market intel. Nimesh, what are you picking up?
Hi, Prashant. Very strong day. It's a good start to the fresh series as well, right? But again, it looks like the momentum is clearly with the bulls. I guess all eyes will be on the election outcome this Sunday. So that could be a potential trigger for a bit of volatility, so to speak, if that has to happen on a Monday morning. So that's something which is to be very carefully watched out for. But I guess what doesn't need a moment or any reason or any trigger is the PSUs. Big momentum continues in the PSU basket. Again, the power PSUs are buzzing in trade. PFC, REC, GAIL, all are buzzing on good volumes today. Just an interesting feedback that I picked up from when I spoke to some dealers in the dealing room. I understand a large AIF has got a fresh inflow into that fund, and that's deploying money into the PSU names. So that potential explains the kind of move we have seen in the PSU stocks in the last many days, and that's the case today as well. On the other side, a bit of profit booking the auto names. So Ashok Leyland is down 3%. Hero Motocorp, despite a double upgrade from BofA, is down 2%. So clearly some signs of profit booking there in the auto names in today's trade. And also the broader market continues to outperform. So the Midcap index is up another 1%, and huge momentum in many of those Midcap names. But clearly, I guess from a trigger point of view, all eyes will be on the Sunday, the outcome, which the election share outcome, which will have an impact on Monday morning in our trade.
Okay, what about stocks, Nimesh?
Well, in terms of individual names, the first stock on my list today is Canterville. We normally don't talk about this stock, but the stock is up 12% on huge volumes. Actually, the volumes is largely because of the large block. There is a block of 10 lakh shares. I understand some clutch of large HNI investors bought in today's block deal, and after that, seen a big up move in that stock. So that's the first one. The second name is Shriram Properties. Been consolidating in a narrow range, but I understand the very large block is around the corner. So the large block deal is likely to happen very soon in Shriram Properties. The third name is Cyient. Within the IT names, this is one stock which stood out today purely on buy flows at FIDS. So looks like some institutional interest is back in Cyient at these levels. And the last one is Inox Wind. Been buzzing in the last many days. Even in today's trade, it's up 5% on good volumes as well. I guess the street is now anticipating some large order wins for this company very soon. So that's keeping the stock excited.
Okay, got that. So that's lots of stocks. Nimesh, you want to discuss one more, which is buzzing today, and that is Zee. I don't know what to say. This saga is endless, right? We don't know what's going on. The last, in terms of the legal standing, the last was, I think, the relief that the current promoters got from SAT, Securities Appellate Tribunal. So what is the latest in the merger?
Well, Surbhi, leave apart the media reports and any sort of speculation. We don't know which way, whether Puneet will stay, Puneet won't stay. That something is a little more speculation. But just just to give a context on where it stands. I understand the Zee-Sony merger is in the last leg. Whether it'll go or don't go, we don't know. But as things stand from a procedural point of view, it's in the last leg. So what to watch out for, in terms of next step? What I understand, the next step to watch out for would be the submission to Ministry of Broadcasting for the approval of the merger. So that has to be done by Sony. The buzz on the street is maybe you'll see that happening early next week. So that maybe explains a bit of excitement in the stock in today's trade. So that is one thing which is pending, which is an application to MIB, which is Ministry of Broadcasting. Once that approval comes in, then they have to file for ROC. So for ROC, there are two requirements, the MIB approval and the audited numbers, which are already out, right? The quarter 2 numbers are out. So the audited numbers are there, the MIB approval is pending. Once that comes in, then they have to file for ROC and give a roadmap on which day the stock will get delist for a brief period and again relist in the new avatar. So as things stand, as far as Zee is concerned, the immediate next trigger to watch would be when they file to MIB, and even for the MIB permission, they'll have to mention all the details, including the board of directors, which means they have to mention the name of the managing director as well in the proposed merge entity. So I guess from a trigger point of view, that is something to watch out for as to when they file for MIB, and once they file for MIB, then the approval will be something to watch out for.
Okay, all right. That's very interesting. And so there is some basis to what's going on, although this is still in the realm of to happen in the future. But I think nicely put into context with the move that we're seeing, 5.5% higher. Mitesh is with us to run us through what to buy or sell today for a reverse trade when we come back on Monday. This is tricky, Mitesh. Markets at new highs, election results on Sunday. So what to do?
So I think markets, given the fact that markets made a new high before the election, I think, suggests that the strength could be, there in the markets, and we go with the flow, we go with the trend. I think there's obviously a risk of an event coming out, but the odds, I would say, the percentage is in favor of staying long, so we'll do that. Bajaj Finserv is a BTST with a stop at 1679 for a target of, 1677 for a target of 1700. And the other one which I like is Bharat Forge, which is a BTST with a stop at 1140 for 1175 as the target.
Okay, all right. Mitesh, thanks very much for that. By the way, guys, there are two movies on, right? Two new ones. We had Ajay Bijli yesterday talking about it.
Animal
and
is one.
Sam Bahadur.
Yeah, Sam Bahadur.
And apparently, someone just messaged saying that the initial reviews in Hindi and Telugu for Animal are quite good.
Yeah.
So we don't know.
I think the early booking has also been fantastic for Animal.
The box office has got its mojo back in the last couple of months.
And even the 12th Fail is supposed to be a good movie.
Plenty of
Came out a couple of weeks back.
Just in case you guys are interested, Oppenheimer is on television now. So.
Our biggest resident Oppenheimer fan, yes.
All right, we'll take a quick break here. We'll come back. Manish Sonthalia of MK Investment Managers is with us on the other side. Stay tuned.
Welcome back. 9 minutes to go for markets to close, and it's going to be at fresh highs for the Nifty at 20,270, though the Sensex is still away from its all-time high levels by nearly 400 points. Manish Sonthalia, CIO, MK Investment Managers, is now with us on the show. Manish, it's all great when you've got an SIP going, but what about for direct investing into stocks? At these levels, where pretty much everything is at an all-time high levels, valuations are racing, what would you bet on?
I think wherever valuation comfort is good, I mean, those are the areas where there is a greater inclination to add on to investments. I would believe two clear areas would be technology and pharma. Add to that financials. I mean, these are three clear sectors where there can be, money parked, even at these levels, for the simple reason that I think now on a broad macro basis, it's not so long into the distant future that you can see rate cuts, you won't see a rate increase. Iran has not stepped into the Middle East war. There's 30,000 crores worth of fresh pension money from US likely to come into India. So obviously, you have these positive tailwinds. I mean, added to that, the valuation discomfort that you saw in Tata Technologies IPO yesterday, I mean, it's pick and choose, but it's all about, individual stocks.
tech earnings have bottomed out? Because you are saying there is comfort in adding to technology now. They've gone through a long period of earnings downgrades. Has it bottomed out?
Well, broadly, Q3 is going to be a soft quarter. You would have furloughs, etc. But markets would look through all these numbers. Is basically waiting for a trigger when there's going to be a rate cut. And I think previously it was believed that rate cuts in the US would begin, let's say, after a hiatus of 1 year. But now that waiting period has got shrunk down to 6 months. I mean, that's the base opinion that we are working with. We have seen all of that positive rub-off effect on the NASDAQ components as well. And I think in our case, in India, we have seen similar effects on the technology pack. It was undervalued if you was to consider slightly medium to long-term view. And I think it's building up on that. It's not going to be about immediate Q3 numbers, but what's likely to follow in FY25.
Give us names, Manish. Good afternoon. Where should you said pharma, tech?
I mean, look, I can talk about stocks which are there in my portfolio. I can talk about, let's say, we talking about relative valuation to something like a Tata Technologies. I mean, give or take here and there, 700 crores of profit for FY24, translating to 1,000 crores profit for FY26. I mean, similar, industry, engineering, R&D, LNTTS, would be a 2,000 crore profits for FY26. Now, if you were to assign a 50 to 55 PE multiple on Tata Technologies for FY26 numbers, and if you were to put a similar multiple for LNTTS, you would get 1 lakh crores of market cap, which essentially means if we are at 4,800 rupees stock price today, this number should be a 10,000 rupees stock price. So this is one name which I'm betting on, purely on account of the fact that I would have similar or better visibility growth on this name than Tata Technologies. And I think if the entire sector is getting re-rated, you would have Alexis and Science of the world, or your Tata Technologies, etc. Then why not this name? So this is one name to reckon with. And I think for fiscal, or let's say calendar 24, domestic farmer would be a name to reckon with. And everything is going to get re-rated. Two strong names in this space is Ipca and Alchem. And I mean, valuations are very benign given the visibility on growth. I think these two companies, again, are due for a major re-rating, and I would have them in my portfolio.
Okay, got that. Manish, hi, good afternoon. Let's get your views on the other recent listings. Flair Writing is up 50%. Then there was a Gandhar Oil, which had a dream start as well with a 75% pop. And then IREDA, a PSU company receiving such a warm welcome on the street as well on day one itself, right? So do you think the kind of exuberance these stocks and these listings have seen, is it justified? Did you like any of the stories?
Look, renewable financing is going to be a big theme. Of course, the whole bet is on renewables between now and 2030, and every agency in this space will get a major re-rating, not only on account of growth, but also P re-rating. So I think IREDA has seen a bumper listing, but please remember, IREDA is only a refinancing agency. Of course, they are only to do with renewables, so of course there is a re-rating that they have got. But I am more comfortable with names like, let's say, PFC or an REC, where the balance sheet is very good. These are valuations which still about a few weeks back were trading at 5-6 prices to earning multiples, 4% dividend yield, and spectacular growth ahead of them. So within this whole refinancing, or let's say financing space of energy, not only renewables, but even thermal and so on, I would bet on a PFC. They seem to be on a more benign valuation. And of course, REC is a subsidiary of PFC, even though the managements are different. But my biggest bet would be on PFC. As far as the recent listings are concerned, I don't know. I mean, given the way the P ratings have happened on listing day, just too much of money chasing few of these names. I would not bet on any of them. But yeah, I mean, again, within this whole consumption, I would believe that in the run-up to, the central elections in 2024, sooner than later, you will start seeing populist measures come out. And of course, that would mean a booster for consumption names, both discretionary and staple. And this is one space where, again, there is not too much of an upside movement in the last 2 or 3 quarters. So maybe, again, the consumption names are something to watch out for. But otherwise, other than this, nothing majorly attractive for me as far as the news are concerned, even though they have had blockbuster listings.
All right, Manish, we'll leave it there. It's a pleasure. Thank you very much for joining us and speak to you soon again. Thanks indeed. Interesting chat. Well, 20,255 is where we are leaving off at, which is not the day's high, but it's not. There's no great big shakeout or anything of that sort. 35 points above the previous high of 20,222 is where the market leaves off at. The high today has been made at 2291. So about a 40-point drop-off from the day's high is what we've seen. And maybe you just look at where this drop-off came. Most of it actually, the high was made at about 206. And then there was a bit of a dip. There was a, that was bought into, then another lower high at about 3 o'clock, and then finally, actually it's the last candle going into the close, last 10-minute candle, where you basically moved a little lower on the index. So that's what's going on. The Nifty Bank will come up on your screen, 0.75% on the Nifty Bank. The 61.8% retracement was 44,740, and we're leaving off at 44,800. So about 60 points above that level, but better than yesterday. And the Nifty Bank also dropped off quite a bit from the day's highest point. The small cap index ends 0.5% higher. It's a red candle, which means we've ended below the opening levels. And I think the small cap the mid cap index also saw some profit booking. It was super strong in the earlier when we started, but we end just about 1% higher. But nothing to complain. Wrapping up a pretty good week all told. For the Nifty, for the week, it's almost 2.5% gains. Prima.
And for the mid-cap index, it's an over 3% gain, and that too ahead of the all-important state election verdict. Some of the big movers for the day include ITC, top gainer, 3% rally on that. In fact, FMCG had a good day, Britannia up 2.5%. Axis Bank was clearly the stock of the week with a rally of 9.5%. On the losing side, Wipro sold off. That was the top loser with a cut of 1.5%. And weakness seen in Hero MotoCorp and Bajaj Auto.
Okay, quick mention of the mid-caps, which have had a fantastic day. The mid-cap index hit its fresh all-time high as well, 1% up by the time we've closed out with very strong breadth. Advanced decline ratio is well in favor of the advances. Let's look at the movers and shakers. This market has PSU written all over it. No matter what stock you're picking up, PFC, REC, for instance, they were in pole position today. Gains of about 7, 8, 9% on these stocks. There's PNB, there is NHPC, there's GAIL, there's Bank of India, Aerocon, MMTC, Bank of Baroda. I'm just going on reading the list of top gainers with top volume action, and it's really all PSUs out there. There's some profit taking on Tata Technologies after yesterday's stellar listing, 7% down on that stock. Ditto for IREDA, about 4% down there as well. Kesoram, finally, of course, with the deal having been announced, ends on a 5% upper circuit today. And Zee, let's watch out for Zee when we come back on Monday, because there's some anticipation that there may be good news with respect to the merger. Zee is going home with a gain of 5%. So strong day for the market pretty much across the broader space. All right, with that, we are out of time on this edition of Closing Bell. Thank you very much for watching. Have a fantastic weekend. But don't go anywhere, because our Friday edition of Smart Money is coming up right after this break.